Management at NMDC is now with us, where Chinese iron ore prices are at a record high. Sir, thank you so much for taking out time for us. There has been a massive surge in global iron ore prices. Can this be attributed to supply side issues as of now?
No, there is a demand side angle to that also. Of course, there is a supply side issue. But you see, the previous surge touching 110 around 15 days back, 3-4 things happened almost simultaneously. Of course, there was the Vale incident, which actually took down around 60 to 80 million tons from the international market. But what also happened was in the northern sector of Vale, which is completely a dry processing zone. It's not a wet processing zone. There were very heavy rains till up to mid-April. So considering a 45-day transit time from Brazil to China, so that affected around May end markets. Plus in Australia there was cyclone Veronica, which hit the BHP port of Headland, and accordingly there was problems in dispatch from Australia, and there was a fire in the Rio port of Dampier. So all these 3 or 4 things taken together had a major supply side issue in the iron ore market. Apart from that, there has been a demand pull as well. You see, China, what has happened, the production of crude steel as compared to last year has grown by more than 10%, which is very, very healthy. This month, in the month of May, in fact, they did around 89.04 million ton, which is 10% higher than last month. Even if you see up to May, that is the first 5 months of this year, and they maintain a calendar year, so it is around 404 million ton, which is more than 10%. So there has been a demand pull as well, and of course there has been supply side issues as well. So both taken together, there has been a major spike in this prices.
Hi, this is Nayantara Rai joining in from New Delhi. The rise in iron ore prices have once again threatened, the margins of steel companies. Is that going to lead to maybe, a shortage in production, which could in turn cap iron ore prices? There's also this entire fear that steel production is going to take a hit if the government doesn't act swiftly, doesn't act fast enough when it comes to dumping by China, which is now looking even more in probability thanks to the trade war with Donald Trump in the US.
Now, what has happened in China is that despite these very high iron ore prices, the margins have been reasonably sustainable. April margins we read has been $94, and May margins has been around $80. These are rebar margins. So if you compare it with the first quarter, the first 3 months of this year, it's been still 50% higher. Now, due to a little bit more of scrap charge and even the Chinese mines being reactivated, some of them being reactivated, the margins have been reasonable. They have not been too much under pressure. Yes, from 94 it has come down to $80 in the month of May, but still it has been fairly robust. The margin is still nothing to really complain about, especially if you consider it that they were sub 50s, around 60s in the early part of this year.
Where do you see iron ore prices in the near term? Will they stay above $100?
It will be around 100. 100 is more of an aberration. 110 is more of an aberration. You see, a few things that are likely to happen here. One is that Brazil, at least Vale and the world is banking on what is the Brucutu mines. It's around 30 million ton. The lower courts had actually allowed it to operate, but then subsequently the higher court actually stopped the operation. If Brucutu comes back, that will be 30 million ton. There are 3 other mines in Brazil, a total of 30 million ton, which are on the dry circuit in the southern part. So that could be another one. So far as Rio and BHP are concerned, they can ramp up around 20 or 25 each, just by capacity utilization and debottlenecking. They of course have already, at least BHP has already been on record saying that they will not add, they will not invest in addition of capacity. They are just investing in replacement of capacity even in the long term.
The agitation at Chhattisgarh that has caused mining activity at NMDC's complex to be halted for almost a week. What's been the impact of that? What's going to be the impact of that? How much of a production loss, for instance, has the company faced?
You see, what happened was that the agitation went on for 6 days. Kirandul was closed for 6 days, of which one was a Wednesday, and Wednesday is a holiday in Kirandul and Bacheli. So we actually lost production for around 5 days in Kirandul. So, and Bacheli it was closed only for 1 day, which was a Wednesday. So that was a holiday anyway. So we didn't lose any production in Bacheli. Now Kirandul, the current season, we do around 30 to 35,000 tons every day. So if it is closed, we lost for 5 days, it will be anything between 1,50,000 to 1,70,000 of production loss. But what I can assure you is that this loss would not affect our Q1 outlook or the FY19 outlook in any way. Because as I had told you a little earlier, that the first 2 months we have been, as compared to last year, already 1.5 million ton, that's 15 lakh ton more than what we did last year. So that's been pretty impressive.
Thanks so much, sir, for taking out time for us. Always good to get perspective from